Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is LevP, CEO of Nasdaq-listed CarParts.com, to discuss what auto businesses can do to prep for the electric vehicle wave and meet demand. Lev, it's great to see you. Welcome to Trade Talks.
Thank you so much for having me.
The EV industry is growing rapidly. What's driving the demand? Is it demographics or environmentally focused consumers?
Yeah, I think it's a little bit of both. The demographics are changing and the consumer is younger, and so they tend to skew more towards EVs. And then a lot of the manufacturers are also shifting. GM announced that they're pulling back their plan to 2035, where they'll sell all electric vehicles by 2035. Ford made similar announcements. They're pulling back a lot of the investments into 2020s. So by 2025, they're going to have a lot of EVs on the road. So I think it's a little bit of both. There's supply and demand on both sides.
Right. And of course, the issue is with the new breed of cars comes new demand for suppliers, right? But how can auto parts suppliers keep up? We're seeing disruption here already.
Yeah, that's a great question. One of the common myths is that the auto parts supply is very different. In reality, 93% of parts actually overlap between EVs and a traditional gas-powered vehicle. And so what we've seen is in the supply chain, there isn't that much disruption. It's the same mirrors, bumpers, door handles that will sell today. Certain parts are different, and there are a lot of hybrids on the road that have both, the electric component as well as the gas-powered component. But the supply is not that different for auto parts, at least.
This is going to force traditional businesses to revamp operations from the ground up. In fact, it's going to impact the entire ecosystem. What can businesses do now to get ahead of the wave that is only going to get bigger?
Yeah, I think for the dealerships, that's a big change as well. A lot of times the cars today, because of price transparency online, a lot of the revenue that the dealerships derive and a lot of the profit comes from other sources like parts, as well as service. EVs do require less maintenance. There's no oil changes every 3,000 miles. The brakes last a little bit longer because of regenerative braking. So a lot of the services industries will have to rethink how they derive their revenue and how they derive their profits. But they can turn to other things like providing charging, providing other services that consumers are looking for. Charging still takes a little bit of time. So can you open a cafe or a restaurant so that while somebody's charging, they can do that and browse other things. So I think businesses will be creative in how they address this problem, but there's definitely going to be disruption on the services side.
And Lev, when we think about it from the perspective of CarParts.com, how are you managing this pivot?
So we recently launched CarParts.com/EV, which is a hub for electric vehicles, not just Teslas, but Toyotas and Volkswagens and all kinds of manufacturers. We have parts for over 700,000 applications. And so, we're getting ready today for what's going to come in the future by trying to build a resource for EV owners where they can come and they can get information and they can discover how easy it is to repair their vehicles themselves. It's not that much more complicated than a traditional vehicle. And so we're starting to build the resources and the community today.
All right, Lev, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you.